Hello. This is Raphael Aristi from Cheap Trade Room. It's a Sunday around 5 o'clock, and I thought I would take a look at the past week and see what happened on Friday and give you the rundown on how and what are these people who make decisions to buy and sell in the market movers. It's not the market. It's people just like you and me behind it making decisions, and they're scared to death of making the wrong decisions because they're using other people's money to do that. These are the managers and everybody who's in charge of somebody else's money, either the government or all these different funds, corporate and private, all these so-called financial advisors. Uh, Let me ask you something here. Is the market in an uptrend or what? We're going to answer that question today and see what's really happening. Okay, and check it out. I'm going to go to the chart last week. I don't do any editing. This is like raw type of video. I don't have time to do editing or do anything like that. Okay, here we are. This is the 6-month view of the SPY ETF. It's ETF is exchange trade fund that represents the S&P 500. You cannot buy shares in the S&P 500. So this exchange trade fund, you can do that. And it has the same, each share is the same price or whatever they call it in the S&P 500 points or whatever as the index itself. Now, there are a couple of things I'm going to go. I hope you see my cursor here. I'm going to start like this right here. Let me just put a little square around Friday's candlestick. All right, so here we are. Okay, so you can see it. I'm gonna highlight it, and let's do like orange. Okay, and let's widen that up to 4 so you can really see it. Let's do 3 pixels. Let's see how 2 pixels go. Okay, that's enough. And okay, here we are. We got a tall rectangle over Friday's price action, and it looks like a cross, right? This is a doji, and this type of candlestick almost in the middle. And it ended up, let's see what the closing price is, 429.90. The open price was 429.96. The high was 431.99. And the low was 428.87, and it closed at 40, and that's why it's a little bit below the middle here. It looks like a star, but it's a go, and it's an indecisive type of candlestick. They couldn't make up their minds. Buyers went up, took it up to a high of 431.99. They really wanted to confirm the end of the bear market, but most of all, the end of the correction. How do we know when that is the correction? Okay, I happen to have made a note. I think it's here somewhere. Let's see if I have that pushed away somewhere. Let's see. I think it's 431.77. Let's do a year. Take a look. Okay, 431. So let's figure it out here, okay? I had mentioned it before. I think 431.77 or something like that. Let's expand it more and see if I hit it even further away somewhere. Okay. All right. So let's see if I can bring it out in the preset template that I have. Okay, so the beginning of this, I did a video on the and this thing started January 5th, 2022. Okay, I really want to get that because a correction begins at 10% of the New Year high, which was, let's do the 2-year over here in 2022, January 2, 479. Let me see, January 5th, 479.98. Now, let's go to the 5th. Yeah, 479.98 is the New Year high for 2022. And let's get back. We take 10% of that. And let's see where that takes us. Let's get back to it's 479. Let's do this again. $479.98 is the high. 479.98, and let's get back to the 2 days. 479.98, and then we can deal with this, with these numbers, because it affects it. Everything, you know, 479.98, 2 days, 2 minutes. Okay, we're on the 6-month view, because the 6-month view is where you start everything, where you confirm the trend. Here we go. We got a zooming in on the past week, and let's do 10% of that, 479.98, and come up with the, I think it's 431. So I know it's 431. Okay, so 479.98 times. They say that the definition of a correction is 10% of the New Year high. So it's 479.98 minus 47.998. 479.98. Okay, so we're going to do a little reverse thing. 431.98. That's the confirmation that we are out of 431.98. That we are out. That's the magic number. That we are out of the correction, out of the bear market. Okay. So what happened here? Well, first of all, let me mention that we had resistance here at the 429.62. This day and this day were the same thing. This day a little lower, 429.60. So we had resistance here um, for a little bit, couple of days. Okay. Right here. And let's just eliminate extend right so we could see that. Okay, so 479, 429.62 is there. This one here yesterday or Thursday was 60, 429.60. So you know, consecutive 429. So it's resistance, except for, and then Friday happened. All right, so Friday's open was 429, very robust open, higher than the resistance there. It looked good, shot up to 431.99. It broke it confirmed the break of the correction and the bear market for about 7 cents. Then it shut down to 428.87. Let's look at that day. 427. Okay, so all right, here we go. So this is the beginning here, okay, and it shot up here. That was early on during the day, right? 431.90. Well, you know, over here it's a little different. Over there it was like 431.99, but maybe it actually did not do it. You know, I don't know why they're adding this thing here, the high. Okay, 431.99 for this little candlestick here. Let's thicken it up here. This one right here, okay, high of the day. And then a couple of puts, you know, one put here, got out, another put here. That's nice money. This was nothing. And it reached the low of 428.93 or something like that. 429.09. Is that the low? 428.88 was the low on that descent. Couple of puts there, nice money. And then it popped back up, and this is where it ended. Okay, it didn't quite make it back up up to this the second lower high here. This is the third lower high. It went past the third lower high. This is like one second lower high. This is the third lower high, and this is the high of the day right here. Okay, so let's go back to. So apparently it was a few, like not even one candlestick. Like it wasn't this. These are 1 minute candlesticks. Okay, this is 1 minute candlesticks, and the high, it didn't stay there. All right, it came back down. As you see the numbers on over here on the upper right hand in black. There's my cursor. Here we go. Right here in black, I'm going to put the cursor over this candle. This is the high of the day, Friday. So it was like seconds that it broke. It confirmed the end of the correction and the end of the bull market, okay, and the end of the downturn. Like there was not enough people interested, these market movers that have these massive computers and buy thousands and thousands of shares at one time. Okay, this price action here looks like retail action. Doesn't look like institutional action. So the institutions stayed out of the market yesterday. Okay. You can tell when the institutions are buying and selling, there's a big difference in the candlesticks. Okay, and it's faster. So these are retail traders, like you and me, they, when I say retail, like 10 million, 5 million, 20 million, 50 million. Okay. I'm going to tell you right now how many shares this was here. This was, okay, the volume. Okay, I'm sorry. So right here, that's what this was here. So this was 2 million, let me see, 2,070,000, like 2 million is nothing. 2 million shares, 2 million transactions, whatever you want to call it. This is a retailer or a bunch of retailers that did this, 50, $60 million. And they made some money. Excuse me. They were not interested in the coming out of the correction or the bear market. These are guys that are making money. They don't give a hoot what the government says. So an options traders follows these people, and we follow their decisions, the results. And last Friday was the result of this is the result of their actions and their thinking. Right? So let's talk about something else here. That's like Friday. Friday was an indecisive day. Okay, let's get this thing out of here because we don't need to know the price. Okay, so this is a failed attempt to come out of the correction and the bear market. Okay, well, it's not the bear market because now it rose above, I think it was 30%. Well, the whole thing was like 26%. Bear market kicks in when it's a consistent, when it stays below a consistent level, which I don't need to mention right now. So we have resistance here, and we have this indecisive goji here that could not hold the escape of the correction, nullify the correction. So I remember this billionaire, with his somebody on my Yahoo news feed. Oh, billionaire predicts that from now on. This was last week. It's an uptrend. Well, it has not happened. I don't know what chart he's looking at, but there is no interest in doing that whatsoever by the price action that's been going on. Where does he get this information? He's not involved in it. Probably he's a billionaire involved in the market. He's not. Apparently, he's not. I don't know where his words come from, but he's not involved in this. He's just talking. So this is why I don't listen to the news. I don't listen to these pundits that don't know anything about the market. They haven't done any technical analysis. They just spew garbage out of their mouths to the regular public without any knowledge of the consequences that it causes people and the stress and this and that. So we are still in the correction. We are still in the bear market. There's no effort of the institutional trading people to make any effort to take this market beyond and above new heights. Let me bring something else to your attention. See this blue circle here? This is a gap from the high on June 1. Today's the 11th. 10 days ago. June 2, the open was 424.50. This was the high here, 422.92. So 424.50. This is like more $2.50 jump. So this is called a gap. And there's a rule that says all gaps shall be filled. No doubt this is a hard rule. Whether it's up, the gap is up, Okay, that means the price action is going to drop to cover this gap at least below this high here, 422.92 on the first. So, I hope you did some quick math. 422 from the closing of 429. It's like almost $8 in the price of the shares of this SPY ETF. And you could, I don't know what they call it points or whatever in the S&P 500 index. Okay, 100 points or 700 points, I don't know what it is, so 70 points. Stupid language that people don't understand. They do it on purpose. It's like insider language. I don't know why they use that, because they don't want people to understand what they're talking about, making themselves look like really smart when they really are not. So it's stupid news, and it's been like that for years. I think ever since computerization of the market. So we have this. So I expect Monday that even if it opens higher than this close, okay, it's going to drop. It's a loose feeling, because I know it could be tomorrow, it could be Monday, it could be Tuesday, could be 5 days in a row, where it goes lower, 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 but this gap must be filled. And from a stock option contract trader's view, there may be some calls there, but the trend, the intermediate trend there is going to be, should be a downtrend. So first rule of trading: trade the trend, right? Trade the trend. So this is not going, no longer be in the short term an uptrend. And that's my 2 cents. And in other words, let me see, where do let me get back to, this whole thing, when is what's going to happen here, that when it gets above that confirmation, okay, that's when the fat lady is going to sing. Okay. That's when the fat lady is going to sing. And where is that fat lady? Okay, I don't want this. I don't want Word to to pop up. Yeah, this is not going to be edited, ladies and gentlemen. This is real life stuff. I'm not a master video. Okay, so it's still going. My computer's a little slow. Let's do this. Okay. So we took a look. So the answer, like, is this an uptrend? For the market, is it an uptrend? If it continues, yeah, it was an uptrend, and now we have this intermediate, I guess, recess because of that gap. Now, it could continue up, and they'll forget about that gap for another 2 weeks. I've seen that happen, but eventually there's going to be a big drop. If it goes like a month, 4 weeks, as a upward breakout to the top, then eventually you can expect a massive drop, 2 or 3 candles for $1, $2. Excuse me, $2, $3, $5 candles to develop on the 6-month chart. And so, ladies and gentlemen, thank you very much for your time. Appreciate it. And this is Raphael Aristi, Cheap Trades Room. And I bid you a good evening. It's a Sunday night, relaxing. I got more work to do, so take care. Take it easy. Sayonara. Farewell. Adios. Hasta luego. Raphael Aristi signing off.